I'm going to share with you the shocking news that a university professor told me and how it could affect you or someone you know. Welcome to Expanding Wallet, home for empowerment. We create content designed to help you take control of your money and your future. So in today's video, I'm going to cover 3 things. First, I'm going to tell you exactly what that university professor told me. Second, I'm going to tell you about a situation where I think this issue that he's talking about could be playing out. And then third, I'm going to tell you what I would do if I were to get into this situation. Before I dive into the story, I want you to make sure that you hit the subscribe button and then turn on the notifications so that you can be a part of the Expanding Wallet community. So I was on a flight heading to Boston, Massachusetts, where I happened to be sitting on the flight next to a university professor. And after a while, we got to know each other, and he said to me, "Do you want to hear something shocking?" And I said, "Sure, why not?" He said to me that he realized his incoming freshman students were lacking a critical thinking ability. And so I looked at him and I said, "What do you mean? Break that down for me. I'm not sure I'm fully understanding that. And how did you know this?" And he said he realized that they were lacking this critical thinking ability because when he would give them reading assignments, they were not actually understanding the underlying meaning that the author was trying to get across. And so he told me that both he and his wife were were university professors. And so he said that it scared them so much that they decided when they had kids here in America that they were going to send them back to Nigeria to get their K through 12 education, which they did. And then they later came back and went to college and universities here in the United States. So that was what really shocked me, because just think about that for a second, okay? 2 university professors, okay? They could have afforded to send their kids to private schools here if they can send them halfway around the world to go study in Nigeria, right? But that would then mean that the private schools were probably not even up to the standards that they had in mind. And so that's really scary, that if this critical thinking ability was missing, that or was so flawed here that they had to send them halfway around the world. The reason why I'm bringing this story up today is that I'm concerned about people's personal finance and mental health. And where I'm concerned is that we may have a situation where people may start following the crowd and not evaluating situations for themselves when it comes to the financial market. And this is mainly due to the fear of missing out, also known as FOMO. And I'm saying this because I believe that social media can be a catalyst for the fear of missing out. And I'm saying that because you can easily make a social media post and tell people what you're investing in. And so they might run and start investing in that themselves without actually knowing or doing any research and understanding the company or the underlying value, or maybe not the value in that, or maybe no value in the company. And right now, one of my big concerns is when we talk about Wall Street bets and what those guys are trying to do with saving companies like AMC. I'm not sure that everyone fully understands what it takes to save a movie theater company like AMC. So let's break that down. All right, so let's look deep into AMC here. So from an investor standpoint, AMC was not doing great, right? They took a big hit due to COVID in 2020, $4.6 billion to be exact, right? Now, there's something else that's also happening, which is that streaming services like HBO Max and Disney Plus are also affecting movie theaters in a dramatic way, which will also cause them to lose money. What's happening is that not only are the theater type movies being played in theaters, but they're also now being streamed on these platforms. And so right now, recently, what just came up is a lawsuit by Scarlett Johansson, where she's suing Disney over the release of Black Widow in both the movie theaters and also on the Disney Plus platform. And she's claiming that she's losing millions of dollars as a result. And so what do you think is probably happening to the movie theaters? They're also probably losing millions of dollars as well, because people can pay, I believe it's $30 to watch the Black Widow movie at home. It's probably a big savings for a family of 4 or 5 people, as opposed to going to the movie theater. So what has to happen in order for the Wall Street Bets guys to save AMC? Okay, the first thing that has to happen is the stock price has to go up. And so they make posts on social media, and then retail investors jump in, right? Or whoever wants to jump in. It doesn't have necessarily be retail investors, but so they jump in and start buying the shares. The stock price shoots up, right? Well, that's exactly what happened. The stock price shoots up, and then the next thing that has to happen is AMC now has to somehow get the money out. And so they do that by selling shares. So let's take a look at this, right? AMC sells $587 million worth of shares. And so when that happens, right, that many shares get sold. It's actually 11.5 million shares, which equaled out to the $587 million. The stock price is going to come down. And so, that's the first drop. The next time it can drop is, and we'll just look at this chart here, but the next time it can drop is when maybe people decide to move the money out, or even if the Wall Street Bets guys, let's just say now that they find another stock to try to save or invest money into, and they make a post, a lot of people are going to run to that stock. And so the problem is that imagine that you get in here late, right? And let's just look at this chart here. So imagine you get in late, you're up here at the top. Well, look at where it's dropped to. It's down 40% from the peak at $62.55. And if you also notice, when it starts to drop, it's shortly after AMC sells the shares, right? So like I mentioned, that would be the first drop. And so this is really the problem, is just think about it. If you don't really understand stocks, but you hear everyone's making all this money in the stock market, and now you're like, wow, I can just hop in here, and just kind of follow the crowd. Well, if you don't understand those factors I talked about, how they're going to get the money out and how other meme stocks may pop out and then the money moves out, you might get into a very big financial problem if you bet too hard on this. And even worse, imagine if someone borrows money to do this, which they can borrow on what's called margin, right? Using money that you don't have to leverage the money that you have. You can actually borrow a lot more than what you have. And this is where I get concerned when I talk about, are we really understanding what we're doing when we're jumping into these? And now, yes, a lot of people do make a lot of money from this. But again, I'm sure there's people out there who have been burnt by this. So the last big question was, what would I do if I was in this situation? By that I mean, what would I do if, hey, I said I had a little extra money, that I could just gamble away, right? And I decided I was going to jump in on one of these meme stocks. Well, the first thing, obviously understand the risks, which we've already discussed. And so knowing that the stock is going to drop as soon as the company starts selling shares, I would need to make sure that I get in as early as possible, okay? And then I'm going to have maybe some selling points in my mind where I'm going to start to take some profit, because who knows when they're going to start selling shares. And so once that announcement is made, we know there's going to be a big drop. Hopefully I'd have taken some profit by that time. All right, and so let's say I do make a profit. Okay, what am I going to do with that profit? And here's the thing, I've made this money from a high risk investment. I'm going to move it to something with maybe a lower risk investment. So I'm going to take those profits, and what I would do is I'm putting it into something that cash flows. By that I mean something that pays me money on a regular basis. That could be real estate, which would probably be my first choice. Putting into a rental like a multifamily property, or maybe even an apartment building if I got enough money for that type of down payment. And so that again is going to just provide money where I could put back in the stock market or invest into something else. But either way, I'm getting a regular income coming in now. And then let's say I didn't want to do real estate investing. Okay, let's say for whatever reason I didn't want to deal with the hassle of it. I could still actually invest in real estate through real estate investment trusts, which are just stocks that you buy. And they pay you higher dividends than most dividend stocks. And there's a couple of factors with that you want to look at, make sure they have money on their balance sheet and things like that. But that's just some of the places that I would look into, either real estate investment trust or directly into real estate itself. But either way, I want some cash flow coming back from that investment. All right, and last thing, I want to just know what you think about what we talked about today in this video. You know, what the university professor told me, and then also, you know, this kind of FOMO that I'm seeing. What do you guys think? Is this real? Is it not real? Are people out there losing a lot of money? And will people continue to lose a lot of money trying to, you know, cope with what's going on maybe in the job market, with COVID, with inflation, right? On top of everything else. So let me know in the comments below. And remember, to learn all that you can, believe in yourself and take actions that allow you to grow.